Hello, good morning, everyone. Good afternoon and good evening, wherever you are. Thanks for joining today. We've got a lovely day with a very interesting set of sessions. And we start with a keynote on fintech investments. Embark on a journey, on an exploratory journey from the global fintech landscape down to the innovative fervor of APAC and India, with none other than Pranav Pai. Pranav Pai, welcome, Pranav.
Thank you.
Pranav Pai is founding partner and chief investment officer at 31 Capital, which is an early stage venture capital. He's based out of Bangalore, as well as the 31 Capital. As a CIO, he has led over 70 seed and venture capital investments across several investment categories in India and the US. 314 manages over INR 4,100 crores of which is almost like USD 510 million, and is committed has got a committed capital, and its investment includes Licious, Open, Darwinbox, Better Place, Jupiter, Cuckoo FM, Dozy, and Traction. Pranav graduated with a master's in electrical engineering from Stanford University, along with a bachelor's in engineering and communication engineering and communications from RV College, Bangalore. Once again, thanks, Pranav, for giving your time. I think we couldn't have a better person to have, who has such a great experience across the industry. As a venture capital, you've been on board members, you've been on the directly worked with engineers as in your past ventures. And great to have you here, and the stage is over to you.
Thank you, Prancho. Great to be here, and good day to everyone watching the stream. I was asked to prepare a summary of the opportunity in India, and especially from a fintech lens. And since most of the audiences are already fintech operators, I thought instead of just going through what is fintech and the opportunity set, it'd be more interesting to figure out where fintech fits into the overall landscape in India, how we see the market, and therefore, from a bottom-up perspective, what are the unique contributors to the fintech opportunity in India that we might use to build differently, and of course, still get to large outcomes. So I thought I'll cover that in a specific way. And I'll start outside in, because we're in a very interesting time on this planet. Obviously, a lot of churn all over the world. We have wars, pandemics, and obviously a lot of central bank interest in a lot of the currency fluctuations, cryptocurrency, and of course, our macroeconomics are more interconnected than they ever have been. So we're not building in isolation in India. We're building in a global market that changes consistently. I thought it would be useful to start with maybe the most recent example of a truly worldwide event. You can argue even the world wars weren't world wars in the last century. They were most predominantly European problems, but COVID was an interesting example of how a single event has hit the whole world at once. What we can do is measure every economy's reaction to this event and see how, as a retrospective, what effect that had on different economies. So of course, COVID, in hindsight, we've seen many interesting accelerations for tech sectors globally. Every economy reacted differently. Every economy had problems in different ways. Every economy recovered in different ways. But there was one thing that was common for every country in the world. Their central banks printed amongst the highest amounts of capital, and therefore the total money supply on the planet, with 16 or 17 now $1 trillion of infusion, is at an all-time high. And as this surge of capital hits every economy on the planet, including India, of course, we if you remember, we announced record subsidies, record support for different parts of the economy. Eventually, all this capital finds its way into the public markets. And if you look at the public markets, not as a place that you can make some money buying mutual funds or stocks, but as maybe the most democratized voting engine we have globally today, we saw that the whole world started voting in favor of and against entire industries at once, given the information they had at that point in time. So obviously, zoomed up. Of course, it's corrected since then. It's corrected more than 80%. And of course, the entire airline industry in the US was shorted at once. Of course, all the airlines have recovered since then. But the interesting thing for us is to not particularly take the story away on one stock or one sector, but to notice that as events hit markets and as news are digested, today's algorithmic view of markets is so rapid that the buying, the selling, the shorting, the longing, all of it starts happening in microseconds. And as human observers of this case study in retrospect, there are a few lessons we can take away. The biggest lesson is that unanimously the world has voted that tech-first monopolies have benefited. In fact, they're accelerating their benefit. And today they are going to become pseudo-monopolies, not just in their local markets, but globally. Second, very interesting takeaway is that there's always a top 7, top 8, used to be called GAFA, then FANG, then it became the Magnificent 7, now we have a Magnificent 8. Now Netflix is out of favor, it's NVIDIA that's replaced the N in whatever acronym we have. So the interesting thing is, while the composition of that top 7, top 8 may keep changing every year, again, the world is very clear that these companies will grow, therefore their stocks will appreciate, irrespective of wars, pandemics, whatever's happening in the macro economy. So what we have to start getting used to as operators, as investors, as builders of companies, and hopefully as the builders of large outcomes one day, is that every event is going to start leading to K-shaped outcomes, where one set of industries, one set of sectors, one basket of stocks are going to be voted in favor of, and therefore they will recover or zoom up faster than the others. And then conversely, there'll be a set of industries that will not recover or will be hit quite badly through shorts. And therefore, being in those sectors, even though we might be building a great company, may not necessarily end up in our favor long term. And it's very hard to predict. It's very hard to see the future. But what we must do is take lessons away from this most recent event all of us witnessed, and then apply that to what we are seeing today going forward. And so it's inevitable now that digitalization has transformed the entire world. There are 8 billion people on the planet, and a supermajority of all of them are now on the internet, on mobile phones, are active social media users. And when for the first time we have a globally interconnected market on one platform, the internet at once, it's not a surprise, therefore, that the components of the top leaderboards of the most valuable companies in the most valuable stock exchange on the planet also starts biasing very favorably towards tech. This is an interesting chart we found a few years back, where if you look at just the US index in 1917, steel, oil, more steel, armory, telecommunications, et cetera, boring companies from today's point of view. We had the first true tech company, IBM, with its mainframe computing business in 1967. I still remember 2017, I was midway through my starting up 314, and we were just launching our second fund. We were talking to all of our friends in the US. And for the first time, they said they saw the top 5 companies all being tech. And instead of saying this is a good thing, and these companies, okay, this is a sign of our times and what's to come, most people were shorting tech, saying there's no way Apple's worth 800 billion. It has to go back down. Of course, we know what happened since then. Apple is now almost 3 trillion, which is almost the entirety of India's GDP. So the first time in 2017, it was kind of the bringing of the bell of events to come. And fast forward to the end of 22, early 23, 8 out of 10 of the top companies in the US are tech companies. You can argue Saudi Aramco is an entire country's economy in one company, so a little bit unfair. And of course, Berkshire Hathaway is still fighting the fight, but its largest holdings as an investment firm are still all these tech companies on top. And tech is not just eating the leaderboards of valuation. People argue tech is overvalued, the P's are too high, the valuations keep growing, there's no fundamentals anymore. What we're missing in the mainstream media narrative is that tech is also eating the leaderboards of the most profitable companies on the planet. Of course, Aramco, hard to beat their cash flows and their sheer bottom line power, but Apple is not too far behind. $100 billion in profits in 1 year. A little bit absurd if you ask me. Berkshire Hathaway is up there, Alphabet now, Microsoft, Meta is getting there now. Clearly, his market cap is showing signs. So what you're seeing now is it's not just market cap, it's not just leaderboards in terms of the most flashy numbers out there. It's also raw profits, it's also bottom line. And it's something that we, as builders in the tech ecosystem in India, have to start appreciating a lot more. And so we're now in a new normal, where the world's biggest conglomerates are tech companies. And they're not just single product companies, they're multi-product, multi-revenue line conglomerates. Apple is not just a device, phone, laptop maker. It's also the issuer, one of the fastest issuers of credit cards in the US now. It's automating your home. It runs the world's biggest music store. Google, now called Alphabet, literally a conglomerate, is not just a search engine. It's building autonomous cars. It's trying to extend your life through biotech. It's building its own version of Reliance Jio silently in the US. And Amazon, of course, a prototype company of doing everything at once, no longer satisfied just with e-commerce. It's building automation for your home. It's going offline after bad-mouthing offline grocery and retail for 20 years. It's also automating your home security to allow their delivery boys into your home without your permission. And so what we're seeing here is that these tech companies are systematically and coordinating in a coordinated way, capturing every element of your individual digital day. From the mobile operating system to internet search to social media to cloud now, digital advertising, we're seeing that consistently it's one or two companies that are consistently taking over the world's most valuable revenue pools. So this all sounds like bad news, obviously. I mean, it's good and bad news superimposed in one basket. Bad news, yes, it's hard to compete with these companies now. Good news, these are great stocks to own. So if any of you are investing in US stocks, obviously, most of you will own a basket of these companies. But the big takeaway from here for mainstream media is that competition's dead. There's no way we can build new outcomes. Tech story is over. We've reached the peak. But every so often, we see a new company coming up in a sector that we didn't think could be disrupted in a certain way and still build a large outcome. For example, Airbnb is now the world's largest hotel operator without building a single hotel property themselves, right? And obviously, everyone's aware of the Airbnb business model. So this is a good example of how we can still build exponential organizations even in some of the world's oldest industries. And these companies that we build need not be limited to just one geography. They can be global market leaders. They can be global aspirers of taking over global market share in extraordinarily short periods of time. 9 years is a blink of an eye for the hotel industry, which is hundreds of years old, obviously. So in this context, as we look at India, as we come from outside in, what is the world thinking of India today? We've had a fantastically successful G20. We've stood our ground against a war, another war in Europe, now another war in the Middle East. And economically, we seem to be on our best wicket yet. So the derivative conclusion of all of the world's economists, the World Bank, the IMF, even India's RBI after some hesitation, is that India is going to now remain amongst the world's fastest growing major economies for the next 10 years. As of last year end and start of 2023, a big moment in our economic history, we became the 5th most valuable economy in the world in terms of our GDP. After a long economic war for the leaderboard, we surpassed France, we surpassed the UK, and there are only 4 countries ahead of us, and not a surprise, Germany and Japan seem a little bit too close for their own comfort. And even the most conservative projections, these are stand chart projections, for example, see us crossing 5 billion and overtaking the other 2 countries in the next 3 to 5 years, right? So it's quite close, quite palpable. And once we cross 5, we will be the only country on this list to have even a hope of getting to 10. Japan and Germany are aging before they will get wealthier, so they're going to stagnate. So will the UK, so will France. Very difficult for Brazil to get, with its 300 million population, to get the kind of economic engine it needs to get all the way from 2 to 10. It's a long way away. No for Canada and Italy, of course. So to 10 trillion is this great generational war of our lifetime. It's an economic pursuit that, if we're able to fulfill, is the unleashing of the latent potential of this economy of 1.4 billion people. So 5 is inevitable, but to 10, and how soon to 10, that is the question of our generation. And the interesting thing is we now have amongst the largest surges of generational demographics that we've ever had. We will have a massive advantage compared to the rest of the world as the rest of the world is aging. We will have our youngest population at the peak of its productivity. So while AI and other tools are coming up, how do we harness technology to become even more productive and give more of our growing middle class better paying jobs? So that's going to be an interesting challenge. It's not without challenges, of course, our path to 10 trillion. But again, we have some fundamental advantages we should hopefully not miss. And of course, digitization is also transforming India. With now the world's largest population, we have amongst the largest populations on mobile phones, around 700 million internet users, and one of the largest social media user bases on the planet. It's not a surprise that we, as the largest real world population, are also going to be amongst the largest internet populations, and our heft online is already showing. I have some examples in following slides. Now, the cost of access to the internet, because in India, everything is price sensitive, value sensitive. What we've done very successfully as an economy is clamp down the cost of accessing the internet. Our data price per GB is amongst the lowest on the planet. And therefore, the inclusive nature of the Indian internet is unique as well. It's not just the rich people, the top 10 cities, the most well-paid people, the people in the MNCs, the well-paying jobs that are on the internet and forming the consumption class. It is truly a democratized platform. Everyone in India that's an adult that has a smartphone is now using the internet at record levels. And to see how much time we're spending on the internet, the only other country with a comparable population is China. And in many of now the dimensions like the internet, social media, music streaming, games, ride hailing, we are spending more time or as much time or very soon getting to the same amount of time and money as China, our neighbor, is. So now with 20% of global app downloads coming just into India, we are a sizable and significant part of the app economy, the internet economy, the digital economy of the world as well. And therefore, you're not surprised that in India now, after COVID especially, every scale app out there, and not most of them are not, of course, most of them, some of them are Indian, a lot of them are not Indian, of course. India is an open market, as we know, for the internet. All of these companies are seeing a record number of unique users, a record amount of retention, and very soon a record amount of spending coming from their Indian internet user base. And that spending is $180 to $200 billion opportunity every year across multiple sectors, from commerce to travel to gaming to education, of course, to payments and fintech. And as we go through all the sectors that we as a VC firm invest in, we're seeing that now that we have a fundamental platform and access in place, now it's just about making sure we get the online share of all of our offline behavior to the levels of number one, number two, US and China in the next 10 to 15 years. So this is still a story in the making. We're not yet through, we're not yet saturated. We have a long, long way to go. And of course, we also have a massive segment of our population that have just come online, and they are now starting their online consumption journeys. And they are very unlikely to buy online like Bangalore or Delhi or Bombay does. They prefer different languages. They prefer different categories of brands, different categories of products. They have different thinking about price points. They want more premium, not less, which is a big deflation of the VC myth about India. So a lot of things about tier two's behavior coming online are going to make for very interesting and differentiated challenges as we build for the Indian internet. And of course, I think the biggest opportunity for us is Indian enterprise and SME going online. We have only 0.5% of share of Indian business being online today. Our comparables are 10 to 16%. So many, many hundreds of X's still are available for us to make sure that we are able to build large companies in the B2B vertical also. So the Indian startup ecosystem, we strongly believe, will play a tangible role in India's journey to that US 10 trillion GDP economy. And I say that because tech usually leads the real world. Tech usually leads the mainstream economy. I remind you that our true place will be number 3 as the third largest GDP economy on the planet, where from a startup perspective, I'm happy to share we're already the third largest startup ecosystem in the world, again, only behind the US and China. We've created close to $500 billion of value already. And I'll walk you through slides that show a projection is taking us very close to 1 trillion in the next 5 to 6 years from a concept of value added. And in terms of unicorn rankings, again, I don't like the word unicorn. I don't think unicorn is the end state necessarily for every startup or every tech investor. But unicorn rankings are a proxy for how well ecosystems are doing. We usually competed very hard with Germany, France, Japan, the UK, and Israel. Post-COVID, now at I think 109 or 110. Only China and the US are ahead. Of course, I think US a little bit too far ahead. So a real war for the next 10 years is likely going to be for number 2. And if you look at internally, if you look at the market, we now have over $110 billion deployed into Indian startups over the last 7 to 8 years. We have thousands of active investors, institutional, angel, incubators, accelerators, corporate CVCs investing in India as well. And of course, Delhi, Mumbai, Bangalore are the nerve centers of the economy, startup economy here. Bangalore clearly being a leader in terms of deal value, unicorn concentration, IPOs, so on and so forth. And in spite of a bad year, 2022, if you remember, everyone is writing about a funding winter. But in spite of a bad year, we're closing $25 billion across 1,400 funded deals. That's not too bad. Just 7 or 8 years back, when we were launching 314, India was at $2 or $3 billion a year. So 10x in 7 to 8 years. And that's a bad year in comparison of the last 10 years. That goes to show you just how far all of us have come. And of course, we're not building in isolation, just like we're not building in isolation from the rest of the world. We're not building startups in India from nowhere. We're building on the shoulders of giants. What India's IT companies have done with $240 billion of revenue every year, close to $200 billion of that revenue is software exports, and over 5.3 million or 53 lakh people employed. This one industry has created one of the largest economic advantages built out of India in the last 30 to 40 years. And with such large dollar flows coming in, such large employment bases under their wings, they've trained 2 generations of Indians in thinking about software, global delivery, tech first. So you're not surprised that a lot of the tech companies in India who hire from them, who are inspired by them, who build in the shadow of these giants, are growing much faster and are able to do so much more compared to their peers in Southeast Asia and the Middle East and Japan and in so many other equivalent economies on the planet. And just to give you a sense of how large the software export market is in India, I mean, this has become a meme, but now we export more software than Saudi exports oil, Singapore exports electronics, UK exports chemicals. So it's truly become a mind-bogglingly large advantage, and that I hope we will continue to exploit for the decade to come. With 109 unicorns now and $344 billion in value, of course, there'll be churn. There'll be some unicorns don't make it, some unicorns go IPO, some unicorns become decacons, some decacons become back to unicorns. This will be a constant churn, just like it is in the public markets. But very clearly now, from 110 to 200, next 4 to 5 years, it's not difficult to project forward. And just to give you a sense of how well fintech is done, fintech is amongst the largest contributors to the Indian unicorn story, only equal to by e-commerce. Now, coming down to zoom into fintech, why is Indian fintech different? Why is it a slightly equivalently parallel economy compared to what we see in the US and China and Germany and some of the other countries? There are 3 fundamental reasons, and we'll talk about that in the following slides. Now, the first reason is that India has a staggeringly large financial base compared to what people typically believe. We already have one of the top 6 market cap public markets on the planet. Our exchanges are in the top 6 list, NSE especially. NSE is already a leader in terms of the total number of FNO orders processed every day. So the first counterintuitive point is that our markets are already much larger than the markets Indian startups were being told to list in a few years back. Much larger than Singapore, obviously much larger than all of the Middle East combined, much larger than Hong Kong. So there are a lot of interesting things here that as an Indian market, if we unleash Indian startups listing in the Indian market, it's actually a much better story compared to listing anywhere else in the world. And this was a counterintuitive truth. After the recent regulations that were announced in 2019, 20, and 21, you saw a surge of IPOs happening in India. A lot of them were oversubscribed in many ways. So the interesting thing here is the local markets and the local financial base is now large enough to support massive outcomes, massive IPOs, and have founders build a peaceful, multi-decadal journey in terms of their corporate life forward. The second very big difference is that the Indian government over 13 years has built the India stack. Again, all of us know it, all of us are using it. If you're a fintech operator, there's no way you can build without it. Now, this is the only country on the planet that has made so many important infrastructural elements open use and not owned by a monopoly, not owned by a private company, right? So Aadhaar, eKYC, e-sign, DigiLocker, IMPS, UPI, of course, the big one. And if everyone zooms back and sees the last 13 to 14 years, for a country this large, this complex, and of course, for a government that is usually a laggard in terms of technology adoption, for this government, this country, over the last 10 to 15 years to have taken such a massive leap forward has been quite unusual, hard to predict. And it's a great example of how, if we're able to work with systems like this, we can definitely, as founders and investors, think about large outcomes and a part to those large outcomes in highly differentiated ways. Therefore, today, if you want to build a large company, a world-class product, you don't have to reinvent authentication, KYC, data storage, payments, and the integration of data privacy and integration with regulation and so on. You're seeing on the left many, many dozens of large fintech outcomes already. On the right, some of the large fintech outcomes that are being built literally in our portfolio as we speak. And what has India Stack done? It is not only made it easier to build tech companies, but more importantly, for the rest of the country, tech is a very small part of the population of India, as I'm sure you know. But for the rest of the mass of the country, it is leading to tangible improvements in everyday life. For example, the time it took to open a bank account used to be 6 to 7 days. Now it's 1 hour. The transaction time to make one eKYC authentication went from 4 hours to 2 minutes. And the time taken to, say, get a new Reliance Jio SIM card or a new Airtel SIM card went from a few days to 4 minutes. So the incremental productivity improvement in India is many, many hundreds of X's, many, many thousands of % compared to what it used to be. And the fourth very important thing, maybe the most important thing, given AI is now proliferating faster than we thought possible, is that we're also going from a data poor nation to a data rich nation, with 800 million people on the internet, unfortunately, a lot of our data is stored in the US cloud, which is obviously hard for us as a sovereign to govern. But more and more of our financial data is now being housed in India. Even by regulation, for example, the card networks are required to host their data here. And of course, all the IndiaSat data, the transactions, UPI, etc., are all housed in India. Now, if we're able to get through AA and some of the other data aggregator mechanisms, if we're able to get consent-based access to this data and consumers give us permission to use their data to help serve them in better products and experiences, suddenly the end bridge to the consumer is many hundreds of percents more efficient than the rest of the world. And of course, through consent, that means they're opting in. It means it's a brand new paradigm for the internet, which is otherwise built on free products and backdoor data monetization. And of course, the fundamentals of the Indian financial base that I spoke about before are India's banks. We've had a troublesome troublesome 4 or 5 years in the last decade, the NPA crisis with ILFS and so on. What we've done is we've come through all of that, and now the fundamentals of the Indian banking ecosystem are so strong. We now got a top 5 world bank with HDFC's merger. It's one of the top 5 most valuable banks in the world. Suddenly, in a spate of announcements, India's fundamentals, India's banking is the healthiest it's ever been. And therefore, you're not surprised that a lot of India's banks are now not just thinking about how to use technology from startups for their own internal consumption or for apps on top. A lot of them are talking about becoming digital banks themselves, and all of them are launching apps vociferously to compete for the new economy, for Gen Z's attention, for the millennials' wallet share. So competing in India now as neobanks compared to anywhere else in the world, in Revolut and Nubank and so on, you probably remember they become very large outcomes because the incumbent banks did not move as fast. In India, for these set of neobanks, India's existing banks are very difficult competition, definitely not going to bow down easily. But of course, the biggest success story in Indian fintech is the success of UPI and digital payments. We've steadily transitioned from all cash and large volumes of cash, including the daily 5 rupees, 10 rupees, 20 rupees transactions, now to close to 10 billion monthly UPI transactions as of this year, and close to $200 billion of monthly UPI transaction value in India as of this year. So this has meant India is now a leader in real-time payments. In less than a decade, because UPI launched less than a decade back, we've surpassed all of the Western countries, the OECD, even China. And it's not just the volume of payments, it's also the value of payments. But UPI, if you look here, is not only making the biggest cities, the most wealthy Indians, only making their life more convenient. If you look by volume, 72% of India's payments are now on UPI, but only 21% by value. That means it's hundreds of millions of people and the smallest of transactions every day. So this is truly percolated down to the very fundamentals of the Indian population segment. And that is a massive thing about Indian tech. It is inclusive. It strives to make sure it's accessible to all Indians across the country, and it makes sure that everyone has an equal opportunity to participate at the right time. And of course, with the combination of a strong fundamental financial base, strong banks, fantastic in tech through India Stack, you're now seeing banking as a service being disrupted. Every stack of India's banking is going to be fundamentally rewritten. We're coming up with new terms like BaaS and new terms like license holders, TSPs, LSPs. We're seeing this whole ecosystem of players in financial services becoming tech first or solution providers to financial institutions who want to become tech forward as quickly as possible. And you're also going to see, just like the Airbnb story we looked at before, you're going to see new companies, startups like Zerodha, become the largest companies, the market leaders in their verticals in very interesting ways. No one would have predicted that a startup that raised no venture funding would be the leading digital broker in India in the last decade. So that's exactly what's happened. And in fact, even broking, you'd think it's only the wealthiest Indians, only the top 10 cities. Broking is amongst the most distributed phenomenons in India, with even towns like Barpeta, of course, Surat and so on in Gujarat, leading the way in terms of new investors, new accounts opened and eKYC. So these DPGs, yeah, sorry.
We've already, the time is up.
Okay. So I'll close by saying these DPGs, and sorry, it's a large deck. These DPGs, everyone would have heard of AA and OKEN and so on, are leading to some fairly fundamentally radical new ideas in how financial systems should work. And I conclude by saying the market cap question of India, we're at 450 billion today. We're projected to surpass over $1 trillion in the next 5 to 6 years. And if you think of India as this massive opportunity for almost every type of startup out there, certainly in financial services and fintech, now a robust foundation has been installed to help innovators solve India's hardest problems. Once again, thank you so much. I was glad to be able to talk to everyone. Happy to open up, answer questions, or move into a conclusion, of course.
Thank you, Pranav. Indeed, a very strong and a very strong business case that you put across the audience, all the startups, starting from the point, the case why fintech is really the key and it's part of our daily lives. So thank you so much for all the insights with respect to the fintech ecosystem, and you've shared a lot of data points. I'm sure the audience will take a little bit of time to digest, and we have Q&A, which we will take up later, and then we'll get back to them. Thank you once again, and thanks everyone for watching.
Thank you.
Bye-bye.